यस सर, वी आर लाइव। अभी मैं सब पार्टिसिपेंट्स को एंटर कर रहा हूँ। यस सर, वी आर लाइव। अभी मैं सब पार्टिसिपेंट्स को एंटर कर रहा हूँ।
Okay, Aman. Good evening, everyone. Welcome to the 17th session on GST Back to Basic lecture series. The topic which we are going to discuss today is facing unpleasant situations. And the provisions which we'll be deliberating upon today are some of the dark provisions of GST, like arrest, summons, demands and recoveries, offences and penalties, etc. One disclaimer which I would like to make here at the beginning of the session is that today's session is going to be a bit dry because these provisions involve a lot of theory. However, as a taxpayer, it is very important for all of us to understand these provisions, because if knowingly or unknowingly we commit any error or mistake while complying with the GST law, then as a vigilant taxpayer, we should be aware of the legal actions which department can take. What are the remedies available with the taxpayer? What should be the legal course of action if department has initiated any legal proceedings? And what are the penalties and legal and penal actions liable to be faced by a taxpayer in case of any uncertainties? And all these questions we'll be discussing today, which are within the ambit of GST law. Today's session will also help us to understand and make aware about these provisions. With this background, brief background, I would like to start today's sessions, and the first part which we are going to discuss today is demands and recoveries. And the first section which we'll be touching upon is section 73, whereby the department can initiate demand, can issue demand notice under section 73 in cases of other than fraud, suppression or willful misstatement. Whereby if any proper officer is of the opinion that the tax which has been paid by a taxpayer is either short, or he has erroneously claimed refund of tax, or input tax credit has been wrongly availed and utilized by a taxpayer for any reason, and the officer also believes that this short payment of tax or this wrong claim of ITC is on account of reasons other than fraud or any willful misstatement, whereby the taxpayer has genuinely committed mistake and there was no intention of committing fraud or suppression on the side from the side of the taxpayer. In those cases, department can initiate can issue demand notice under section 73, and the time limit which is available to them for completing this proceedings is 3 years from the due date of furnishing of annual return for that particular financial year. So the department has to conclude proceedings, has to issue order. The officer has to issue order under section 73 within a time frame of 3 years from the due date of furnishing of annual return for the period under consideration. And what are the steps which are involved when any demand proceedings are being carried out under section 73. So first, the officer will issue intimation of tax which he feels that is payable by the taxpayer via form DRC 01A. The officer will issue form DRC 01A, whereby he will list down the discrepancies which he has found and he will quantify the tax which is payable by you. This notice has to be responded by a taxpayer via DRC 03, which is a summary of statement. And if you are agreeing with these discrepancies which are being found by the officer, then you may make the payment of this tax in form DRC 03. And the officer, department will acknowledge this payment made by you in form DRC 03, wide form DRC 04. If you have agreed to the discrepancies which department has raised, you have made the payment, you have intimated them about the payment made, and if even officer is satisfied, he will conclude the proceedings by issuing Form DRC 05A. He will conclude the proceedings. However, if you are not agreeing to the discrepancies which have been raised by the officer, and if you are not making the payment, then you have to submit a response to this intimation in Form DRC 01A. You have to file a response to this notice. If the officer is agreeing to the submissions made by you, then again he will conclude the proceedings. But if he is not agreeing with your submissions, then he will issue a show cause notice in Form GST DRC 01. So we will issue show cause notice, and show cause notice is issued via Form GST DRC 01. Now you have to furnish response to this show cause notice via Form DRC 06. Reply to show cause notice is to be filed via Form DRC 06. Then if officer is agreeing to the submissions, before passing the order, officer will give the opportunity of personal hearing. And if he is satisfied with the submissions made by the taxpayer, he will pass an order by dropping the allegations made in the show cause notice. But if he is not satisfied with the submissions made by the taxpayer, then he will confirm the demand which was alleged in the show cause notice, and he will issue an order in Form GST DRC 07. So this order will have to be further litigated before Commissioner Appeals, then Tribunal, High Court, and Supreme Court, so on and so forth. Now, as a taxpayer, if you are not satisfied with the order passed by the officer, and if you think there are some mistakes which are been committed by the officer, and these mistakes are very much apparent on record, then instead of going for appeal, you can also file for rectification of order, and this rectification of order has to be filed via Form DRC 08. Otherwise, you can also choose to go for appeal before Commissioner Appeals and Tribunal, and so on and so forth. So these were the demand proceedings under Section 73 of the GST Act, whereby officer believes that you have made errors, and these errors are not on account of fraud or suppression or willful misstatement. Next, we have Section 74, which is similar to Section 73. However, over here in Section 74, the officer is of the opinion that you have purposefully committed these mistakes, and these mistakes are purely on account of fraud or any willful misstatement or suppression of facts of the case. Now, in this particular scenario, the officer gets a higher time limit to conclude the proceedings. So basically in 73, you had the officer had 3 years to conclude the proceedings, whereas in Section 74, the officer has time limit of 5 years to issue order from the date of furnishing of annual return for the period under consideration. So the time limit available to him to issue the order is 5 years. The steps and the processes for issuing show cause notices, furnishing responses, making payment, issuance of show cause notice, filing reply to show cause notice, issuance of order, rectification of order is similar to that of Section 73, and therefore I will not repeat over here because the steps are more or less the same. With this, we'll go ahead to Section 76, which deals with scenarios whereby a taxpayer has collected the tax but has not paid the same to the government. Now, if any amount has been collected by a taxpayer in the name of GST from any person, then the same should be paid to the government, irrespective of whether the supplies in respect of which GST was collected is taxable or not. If the so-called GST amount collected, if the amount is collected and is not paid to the government, then the officer may issue a show cause notice along with interest and also penalty, which may be equivalent to the amount of tax which has been collected and not paid. Now, under this section, before passing any order, the officer will give you an opportunity of personal hearing. He will give the opportunity of personal hearing. And he has to pass an order within a period of 1 year from the date of issuance of show cause notice. And also, if the person who has borne the incidence of tax, if GST was wrongly collected from him, then that person can apply for refund under section 54 and he can seek refund from government if tax was wrongly collected from him. So these were the provisions of section 76, whereby tax was wrongly collected, tax was collected but not paid to the government within a period of 3 months from the date of collection of tax amount. With this, we will go to the next provisions. Section 77. And this deals with scenarios whereby tax is wrongly collected and paid. Now, what do you mean by tax is wrongly collected and paid? So say, for example, you have wrongly collected tax as CGST and SGST, and subsequently either the taxpayer suo moto finds it out or the department points it out that for this particular supply, the tax payable was IGST and not CNS. Then for such kind of scenarios, the remedy which is available to the taxpayer is then he can seek refund of CGST and SGST which is wrongly paid by him. And he has to pay IGST, the correct tax which is IGST, but he is not supposed to pay interest on this IGST tax which he will be making, which he will be paying subsequently. Similarly, say for example, if a transaction is wrongly classified as IGST by you, and subsequently it is found out that the correct tax which was payable was CGST and SGST, then in that scenario also, you have to claim refund of IGST which was wrongly paid, and the correct tax which is CGST and SGST has to be paid without any interest. Because once the tax is already been paid by you, it is only the change in nature of tax on account of some error, and therefore interest will not be payable on the correct tax which you will be paying subsequently. So this was with regards to section 77, which deals with taxes GST which is wrongly collected and paid. Next, we'll go to section 78. So this was with respect to demands under section 73, 74, 76, and 77. Now we'll go to section 78, which deals with recovery proceedings, meaning whereby if an officer has passed any order under section 73, 74, or 76 and 77, and the taxpayer has not further challenged the order of the taxpayer, nor the taxpayer has made the payment of tax to the government, in those kind of scenarios, the officer has the power to recover the amount which has been determined by him in his order. And those recovery proceedings are prescribed in section 78 of CGST Act. It says that if any amount is payable in pursuance of an order, then it should be paid within a period of 3 months from the date of service of the order. Barring the cases where you are challenging the order of the officer, you are going into appeal, or you have already made the payment of tax. Except for these two situations, the taxes has to be paid within a period of 3 months from the date of service of order. Now, failing which, if a taxpayer does not pay this tax within a period of 3 months, then the officer can initiate the recovery proceedings. And if the officer feels that if it is in the interest of the government, and along with the reasons to be recorded in writing, if he feels that the tax should be recovered even much before than the 3 months, then for the reasons to be recorded in writing, he can initiate the recovery proceedings. Now, with this background, what are the modes of recovery proceedings which are available with the tax officer? This modes of recovery is prescribed in section 79 of CGST Act, whereby they have given various options which are available with the tax officer, with the GST officer to initiate the recovery proceedings. And the first mode of recovery can be deducting the amount which is recoverable from the taxpayer from his refund or drawback amount. If any refund is sanctioned but is yet to be paid, and on the other side, if any amount is recoverable from that taxpayer, then the officer has the authority to deduct the amount of tax which is recoverable from him from the refund amount. The other mode of recovery which is available with the officer is detaining and selling the goods which are belonging to such taxpayer, which are under the control of that particular officer. He can detain the goods of the taxpayer, he can sell it off in the market. And there are detailed rules which are prescribed. Rule 144 lays down the detailed mechanism for officer to undertake this recover tax using this particular mode. A third mode which is available with the tax officer is issuing notices to third party from whom money is due. Now, this is a very common mode of recovery which is generally adopted by a tax officer. We also call this recovery mode as garnishee proceedings, and some of you might have received notices under section 79 for this kind of mode of recovery, whereby say if one of your vendor is not compliant under the GST law and he has made some default, and some amount of GST is payable by him to the government. Now, in the process of recovering those money from that particular vendor, the department finds out that you are his customer and some money is due to him. You are supposed to pay some money to him, and which is balance as on date of the proceedings which are been conducted at the vendor's location. Then in that particular case, the department can approach you and ask you to pay the due amount, that amount which was due by you to your vendor, to be paid directly to the government instead to the vendor, and offset the dues which are payable to the vendor. This is called garnishee proceedings, and this is a very common mode of recovery proceedings which is adopted by tax officers. The fourth option available is seizure of any movable or immovable property which is belonging to the taxpayer. The department has a right to seize any immovable or movable property which is belonging to the defaulting taxpayer. The next mode of recovery available is issue a certificate and cause action through collector of district to recover arrears as if it were arrears of land revenue. So he can approach the collector of district and he can recover the money through that mode of process. The next mode available is file an execution to the appropriate magistrate to proceed to recover as if it were a fine imposed by him. Then these are the certain different kinds of recovery modes available with the tax officer. They can adjust it against the refund heads. And also one more important point to note over here is that, say for example, there is some amount which is recoverable by department from you in the state of Gujarat. Then in that particular case, the recovery proceedings will not be restricted only to the Gujarat registration. It can be extended even to the distinct person, which means whereby all your GST-INs, it can be extended up to PAN level, and even if the amount is recoverable only for Gujarat GST-IN, it can be recovered through your other GST registrations also, which are registered under the same PAN. With this, we'll go to the next provisions, which are in relation to provisional attachment, whereby during the pendency of any proceedings which are in relation to assessment, summary assessment, inspection, search, seizure, demand, or recovery, if the commissioner is of the opinion that for the purpose of protecting interest of government revenue, if the commissioner feels that it is in the interest of the government to do so, then he may issue an order in form DRC 22 to provisionally attach any property or bank account which is belonging to that taxpayer. And subsequently, after attaching the bank account, if the person fails to make the payment, the commissioner may dispose of the said property and adjust the property with the dues. The taxpayer gets a time period of 7 days to file an objection to the attachment order which is issued by the commissioner. So the taxpayer has to file his objection within a period of 7 days of attachment of the property. Otherwise, the commissioner can dispose of the said property and adjust the dues. Also, the commissioner has to provide an opportunity of personal hearing before he passes an order under wide form GST DRC 23. And also, if the department fails to pass an order, so basically department gets a time period of 1 year from the date of attachment to pass the order. Beyond the period of 1 year, the property which is provisionally attached has to be released if the commissioner fails to pass an order. Now, with this, we have finished the provisions of recovery, demands and recoveries. Now, the next set of provisions which we'll be touching upon is penalties. And we'll be touching upon various sections of GST law whereby penalties are prescribed. And first and foremost, we'll touch upon section 73 and section 74. Now, just for the benefit of everyone, just to revise, section 73 deals with cases whereby taxpayer has genuinely committed error and the officer believes that the error is not on account of any fraud or willful misstatement. Whereas section 74 is on account of cases whereby the officer believes that the taxpayer has committed fraud or has willfully suppressed any facts of the case. So this is the difference in section 73 and 74. And the penalties prescribed are: if the taxpayer has already paid the tax and interest before issuance of show cause notice, then under section 73 there is no penalty. You just have to pay tax and interest before issuance of show cause notice. No penalty will be levied under section 73. However, under section 74, 15% penalty will be payable by the taxpayer if he has already paid tax and interest before issuance of show cause notice. Then, if a taxpayer has already paid tax and interest within 30 days of issuance of show cause notice, so show cause notice is issued, and within 30 days of issuance of show cause notice, the tax and interest is already paid by the taxpayer, then under section 73, again, no penalty will be payable, but under section 74, 25% penalty will be payable. So in section 74, you'll observe that penalty is much higher because over there, the officer believes that you have committed fraud and you have suppressed the facts, and therefore penalty under section 74 will always be higher compared to penalty under section 73. Now, the next scenario whereby the officer has passed the order. In that particular case, under section 73, the penalty will be 10% of the tax amount or rupees 10,000, whichever is higher. Higher of 10% of tax which is confirmed in the order, or rupees 10,000. And under section 74, the amount of penalty payable will be 100% of the tax amount. So this is with respect to the cases where the order is passed by the officer. Next and last scenario whereby tax, interest and penalty is paid by the SSE, is paid by the taxpayer within a period of 30 days from the date of passing of order. And in that particular case, again in section 73, 10% or rupees 10,000, whichever is higher, will be the amount of penalty which will be payable. And under section 74, 50% penalty, 50% of the tax amount will be the penalty which will be payable because the taxpayer has already paid tax, interest and penalty within a period of 30 days from issuance of the order. So these are the penalties which are prescribed under section 73 and 74. With this background, we'll go to the next section, which is section 122. And it deals with various kinds of cases where the offences are committed by the taxpayer. And what are those offences for which penalty is payable? If any goods are supplied without invoice. So basically all the black trading which happens that goods are being supplied but no invoices are issued. Second is issues invoices without supply of goods, basically fake invoices, whereby there is only issuance of invoices but there is no underlying supply. The next is collects the tax amount but does not pay the same to the government. Next is collects tax in contravention of the act, fails to deduct or collect tax and also fails to pay it to the government, takes input tax credit without receipt of goods, obtains refund by fraud, manipulates financial records, fails to get registered, gives false information, transports taxable goods without documents, fails to maintain books of accounts, fails to provide information and required documents, takes or distributes credit in violation of the law, obstructs or prevents an officer in charge of a duty to carry out his duties, suppresses his turnover, tempers or destroys evidences, disposes or tempers goods detailed or seized, etc. Now, for all these offenses committed by a taxpayer, the amount of penalty payable will be higher of rupees 10,000 or an amount equivalent to the amount of tax evaded or ITC which is wrongly claimed or the refund amount which is wrongly claimed. So higher of 10,000 rupees or 100% of the tax amount. This is the penalty which is prescribed under section 122. There are some more penalties which are prescribed in section 122. In cases where there is a non-payment or short payment of tax, or the refund has been erroneously claimed or wrongly claimed by the taxpayer, or ITC has been wrongly availed or utilized by the taxpayer, and if the officer has a reason to believe that it is not on account of fraud, but it is a genuine mistake committed by the taxpayer, then the amount of penalty payable will be 10,000 rupees or 10% of the tax due, whichever is higher. But if the officer believes that this short payment of tax or wrong claim of ITC is on account of fraud and the taxpayer has suppressed some facts, then in that particular case, the penalty will be 10,000 rupees or 100% of the tax due, whichever is higher. Also, if any person is helping the taxpayer to commit the offenses and is helping him to not abide with the GST law, then to that person also penalty will be leviable, and the amount of penalty is 25,000 rupees. With this, we will go to the next provisions, section 123, 124, and 125. 123 deals with cases whereby there is failure to furnish information written under section 150. Now, information written under section 150 is applicable only to specified class of persons like RBI, stock exchanges, depositories, etc. It is not applicable to every type of taxpayer. It is a very specific kind of written applicable only to specified class of persons. So the implications of this section 123 might be very limited. And the penalty prescribed under section 123 is 100 rupees per day for the period during which the failure continues. And the maximum amount of penalty which can be levied under section 123 is 5,000 rupees. The next up is section 124, whereby if a taxpayer fails to furnish any information or return under section 151, then the amount of penalty will be 10,000 rupees. And in case of continuing offense, the penalty will be added to the extent of 100 rupees per day of non-compliance, and the maximum amount of penalty will be 25,000 rupees. The last is section 125, which is a general penalty, whereby if the taxpayer has contravened with any of the provisions of this act or rules, for which no penalty is prescribed under section 74, 75, 122, 123, or 124, then this general penalty under section 125 will apply, and the amount of penalty leviable will be 25,000 rupees. With this, we have completed the provisions of penalties. And now we'll move to the provisions of detention and confiscation of goods and or conveyances. And we have section 129, which deals with cases whereby the goods are detained or seized at the time of transportation. And through this provision states that this provision is applicable to person who transports or stores any goods which are in transit, and this transportation of goods is in contravention to the provisions of the act. The officer believes that the person who is transporting these goods has contravened the provisions of this act. Now, in those kind of scenarios, the goods which are being detained or seized can be released in 2-3 different ways. First way is, if the owner of the goods, if he comes forward to the officer and he says that I want the goods to be released, then the officer will release the goods only upon making a payment of tax and penalty. Payment of tax which is payable on those particular goods, and penalty which will be equivalent to 200% of the tax payable. So the owner of the goods has to pay the tax, as well as he has to pay 200% of the tax amount as penalty if he wants to get the goods released. Now, if these goods which are being transported are in the nature of exemption, and if the officer believes that these goods are exempted, however, the taxpayer has contravened the other provisions of the law, in that particular case, to release these goods which are being detained, the owner of the goods has to pay 2% of the value of the goods, or rupees 25,000, whichever is less, and he can get his goods released. Now, this is with respect to cases where the owner of the goods comes forward. Now, if the owner of the goods does not come forward, and say the transporter of the goods or some third party wants to get this goods released, then he can do the same by making payment of penalty, which will be equivalent to 50% of the value of goods, or 200% of the tax payable, whichever is higher. And in case of exempted goods, the person has to pay 5% of the value of goods, or rupees 25,000, whichever is less. By making this payment, the non-owner, the person who wants to get the goods released, can get his goods released by making these payments. Also, the taxpayer can furnish security equivalent to the amounts which are payable under this clauses. He can give security to the government and he can get the goods released. So this was with respect to section 129. Going ahead, section 130, which deals with cases whereby the goods and the conveyances are being confiscated. The earlier provisions with respect to detention and seizure, this is with respect to confiscation of goods. And this provision is applicable to person who has supplied or received goods with the intention to evade taxes. He does not account for these goods on which he is liable to pay taxes, and he has supplied these goods liable to tax without taking registration under the GST law. In this particular cases, the fine, the goods which are being confiscated can be released, and the fine should not exceed the market value of the goods confiscated for this particular goods. And the aggregate amount of fine and penalty leviable shall not be less than the penalty which is liable for detention. So this is with respect to confiscation of goods. Now, with respect to confiscation of conveyances, conveyances in the sense, if the entire truck has been confiscated by the officer who has intercepted the truck, in those particular cases, the taxpayer has the option to pay fine which is equivalent to the tax payable on the goods which is being transported, and he can get his conveyance released. He can get his vehicle released. Now, the fine which is to be paid in case of confiscation, the owner will in addition be liable to also be liable to pay tax, penalty and other charges for the goods and conveyances. And no order can be passed by the officer without giving an opportunity of being heard. So this was with respect to the confiscation of goods and conveyances. With this, we'll go to the next section, which is summons, prosecution, arrest, offences, and compounding of offences. First, we will take up summons and evidences. And Section 70 of CGST Act deals with the provisions of summons and evidences. Now, who can issue summons? A proper officer under the Act can issue the summons. And for what reasons can he issue the summons? He can issue summons for any inquiry which are in relation to the GST law. He can issue summons for inquiring any issues or compliances which are in relation to the GST law. And in what manner can he issue the summons? Similar to the provisions which are prescribed in Civil Procedure Code, CPC Act 1908, the procedure prescribed under CPC Act 1908 has to be followed for issuing summons under the GST law. To whom the summons can be issued? Any person whose attendance is necessary, the officer feels is necessary to give him the evidence and to produce any documents or any other documents. The officer can issue summons to any person whom he feels is necessary and will be able to give give evidence and required documents. Now, next up is access to business premises. So this is with respect to cases whereby the officers visit the premises of taxpayer for conducting audit, for conducting search, etc. Now, for those kind of scenarios, who is the person who is authorized to access the business premises? Any officer, any proper officer, not below the rank of the Joint Commissioner of Central Tax, is authorized to visit the business premises to conduct audit, search, or audit and search and inspection. And what are the rights of the officer when he is visiting the business premises? The rights of the officer is to inspect the books of accounts, documents. He can also access your computer. He can access your computer programs and such other things he may require necessary for conducting audit, scrutiny, verification, and checks, and necessary to protect the interest of the revenue. And it is advisable to the taxpayer to cooperate with the officers when they are visiting your premises to conduct the audit. Whatever documents and access to the records they are asking for should be provided to them, and the taxpayer should cooperate with the officer in conducting the proceedings. Now, who is the person in charge? Who can be the person in charge, and who should be assisting the officer to conduct the proceedings? So he can be the owner of the business, director, partner, or employee of the organization. He can be the person in charge who would be assisting the officer in conducting the processes. And what are the documents? What documents should be made available to the officer? What documents should be available at the office during the time of inspection? The records like trial balance, audited financial statements, cost audit reports, income tax audit reports, and such other relevant documents should be available with the taxpayer at the office premises. And the documents or details which the officer has called for should be made available to them within a period of 15 days from the date of demand, or within such time period, extended time period as provided by the officer. If they are giving you some additional time or adjournment, then within that time, the documents or details which are being called for by the officer should be submitted with them. Next, we'll go to section 69, and section 69 deals with the provisions of arrest. In what all cases can the officers arrest the taxpayer? Now, first, who may arrest? Who has the authority to arrest a taxpayer? Commissioner has the authority to arrest the taxpayer, and he can also authorize a proper taxpayer. He may authorize an additional commissioner or a joint commissioner or a deputy commissioner to arrest a particular taxpayer, and he should have reason to believe that the taxpayer has committed offenses, and because of which the arrest provisions are being enforced. Now, what are the offenses? The offenses which can result into arrest provisions. Those offenses we'll see in subsequent slides. But what are the punishment? What is the punishment which is prescribed in section 69? Read with section 132. We'll try to understand that. And the punishment prescribed is basis the amount of tax which has been evaded. So if a taxpayer has evaded a tax which is exceeding 5 crore rupees, then the punishment which is prescribed is 5 years plus fine can also be imposed on him. And this offense will be considered as a cognizable offense, and it's a non-bailable offense. So if you are being arrested for committing any offense and the value of tax is above 5 crore rupees, then then the taxpayer might be arrested, and that arrest is non-bailable. If the amount of tax evaded is between 2 to 5 crore rupees, then the punishment which is prescribed is 3 years of imprisonment plus fine. And this offense is considered as non-cognizable offense and a bailable offense. So if arrest orders are being issued, the taxpayer may also apply for bail with the magistrate. If the amount of tax evaded is between 1 to 2 crore rupees, then the punishment which is prescribed is 1 year of imprisonment plus a fine. Again, the offense is considered as non-cognizable and is a bailable offense. And for taxes evaded up to 1 crore rupees, there is no punishment which is prescribed in the GST law. Now, what are the offenses? Certain kind of offenses which can trigger into issuance of orders for arrest. Some examples are supply without invoicing. So basically all this black market transactions whereby the supplies are being made without issuance of invoices. Then issuance of fake invoices whereby only invoices are issued but there is no underlying supply. The ITC which has been wrongly availed. Tax is collected but is not paid to government within a period of 3 months. Taxpayer has evaded the tax, fraudulently availed input tax credit, or has fraudulently obtained refund. In this kind of scenarios, if this kind of offenses are been committed, then it can trigger into arrest implications. Now, there are also certain kind of offenses for which the punishment is prescribed. Punishment which is prescribed is a bit lesser. The punishment prescribed is 6 months or fine or both. The offenses are falsifies or substitutes financial records or produces fake accounts or documents or furnishes any false information with an intention to evade payment of tax due under this act. Obstructs or prevents any officer in discharging his duties under this act. The taxpayer tampers with or destroys any material evidences or documents. For this kind of offenses, the punishment which is prescribed is imprisonment of 6 months or fine or both. And this offense is considered as non-cognizable offense and is a bailable offense. Now, after arrest, what is the procedure? What is the procedure? And this procedure is divided into 2 parts. First being for cases which are non-cognizable and are a bailable offenses. In those, if the arrest is made and if the offense is non-cognizable and is a bailable offense, then the person who is arrested shall be admitted to bail or in default of bail, and he should be forwarded to the custody of the magistrate. And for the purpose of releasing the arrested person on bail, the deputy commissioner or the additional commissioner has same powers as the officer in charge of a police station. And for the offenses which are cognizable and are non-bailable offenses, the officer authorized to arrest the person shall inform such person of the grounds of arrest and produce him before a magistrate within a period of 24 hours of arrest. he should be produced before the magistrate within 24 hours of arrest. So these are the procedures after a taxpayer is arrested. And what is the difference between a cognizable and a non-cognizable offense? Cognizable offense is basically an offense in which the police is authorized to take cognizance of the crime at its own, and the arrest can be issued with the arrest can happen without warrant, and the offense which has been committed is considered to be quite heinous. And some of the examples of offenses, barring the offenses from GST law, murders, rape, theft, kidnapping, etc. This kind of serious offenses are considered as cognizable offenses. And whereas non-cognizable offenses are offenses which are less heinous. And uh, uh, some of the examples apart from the offenses from GST law are forgery, cheating, assault, defamation, etc. So this is a difference between a cognizable and a non-cognizable offense. Now, what will happen in cases whereby some offenses are committed by the company? If any offense is committed by the company, then every person who at the time of committing of offense was in charge and was responsible for conduct of business shall be deemed to be guilty and be liable to be proceeded against and punished. And if any offense is committed by a person who is working with the company and it is proved that offense is committed with the consent or is attributable to the negligence of the director, manager, secretary, or other officer of the company, then that particular person shall be deemed to be guilty and be liable to be proceeded against, and he shall be punished. In cases of LLP, firms and HUFs, partners, karta, managing trustees shall be deemed to be guilty if they have committed any offense. The last part which we will be touching upon is compounding of offense. And compounding of offense is basically compromise with the department. So if you have been held as guilty for any offense, and if you are accepting that you are guilty for committing this particular offense, then you might have an option to compromise with the department. And we'll try to see in which all cases this benefit of compromise is not available. If you have already been allowed to compromise once, then again for the second time for same kind of offense you cannot take this benefit of compromise. And if the value of supplies which are being held to be short paid or not paid or ITC wrongly availed, if the value of tax is more than 1 crore rupee, then you do not get this benefit of compromising with the government. And this benefit of compounding of offense or compromise is available only in cases whereby the tax, interest and penalty is paid by the taxpayer. And what is the amount payable by the taxpayer in order to avail this benefit of compounding? Minimum of 10,000 rupees or 50% of the tax involved, whichever is higher. This is the minimum amount. And the maximum amount payable for compounding of offense will be higher of 30,000 rupees or 150% of the tax amount. So this is the minimum and the maximum amount. And between this, as the officer deem fits, he can give you the benefit of compounding. And on making the payment of compounding amount, no further proceedings shall be initiated against the accused person with respect to the offense compounded. And criminal proceedings, if already initiated, shall be abated if the compounding of offense has been accepted by the officer. So these are the provisions with respect to the compounding of offense. With this, we'll finish our session on demands and recoveries, penalties, search and seizure, confiscation of goods, arrest, summons, etc. And if you have any questions, you can either put it on the chat box or you can raise your hand. We'll unmute you from here and you can ask your questions. I understand this session was a bit dry because there was a lot of theory which was involved. but it is at the simultaneously, as I also mentioned, it is very important to understand this provisions. If you have any questions, we can take them up right now. Okay, I think we don't have any questions here. So thank you everyone for your patient hearing, and we'll see you on next Friday. Next Tuesday for our 18th session on GST back to basics. Thank you.